Hello and welcome to episode 66 of Crypto. My God, we have some interesting things going on. I'm going to hop right into it. So our week opens up with the aggressive global flight away from the US dollar. This is still a leading factor. This is still a lagging factor coming out of this tariff chicanery, one of the craziest things we've seen regarding government and money since the COVID pandemic. Of course, this one coming out of, fully voluntary reasoning. Now, nowhere is this capital flight more evident than the opening of the stock market's day. Looking at this awesome visualization by ChartFleau, say that 3 times fast, we can see the impact that it had. Now, let me just go back again to the openings, and we can see the movement of equities across the US. They are all trending down and pretty aggressively. So again, this is that flight away from the dollar with basically everyone trying to dump things to move out of these positions. I don't think this is too crazy, too surprising. However, in tandem, we're also seeing the 10-year Treasury bond go up, right? One of the key statements around all of this tariff elements was the hopes to bring down that 10-year bond. This is what Bessent wanted, but it is looking like there is a fracture between Lutnick, Bessent, Trump, and maybe the triangle is not working together as intended. Now, one of the biggest elements of today's opening, to my surprise, was actually waking up to the Bitcoin price, which has traded in lockstep with equities, right? We have not seen it manifest this digital gold narrative. In fact, we've really seen the opposite, where gold has been taking off, and this whole thesis that Bitcoin is a store of value asset, it's really gone the opposite direction. In fact, with gold going up, you could argue that this pro-Bitcoin candidate has done some of the most damage to the core narrative, or the one that is most central to all of cryptocurrency, which is that it's this alternative investment class. Realistically, it trades like a high beta tech stock, which is no bueno. But again, when we look at this graphic by ChartFleau, looking in the center here, we can see the massive dump that's happened across technology, specifically with NVIDIA leading the downtrend. How nuts is that? Now, meanwhile, at the same time, we have Bitcoin opening up, crossing into, I had to blink my eyes and check that I wasn't hallucinating because it went up and topped out at 88. We're looking at 87 now. This is all pretty good. People have been concerned that it would go, obviously, one of 2 directions, up or down, but a little bit more surprised in the upward momentum and the trajectory. So all of this is to say, what the hell is happening? Are we getting a decoupling? Again, that's something that this is the second time we're hearing these murmurs of this word, decoupling, this sort of realization of the self that could be the most dominant thing to happen to Bitcoin, honestly, since I've been tracking it. It's wanted to be a decoupled asset forever, and it's never really taken that throne. However, if this happens, we could be looking at something quite interesting. I'm not going to go so far as to say that's on the docket, but given all the things happening around the regulators, around the SEC task force, around the White House itself, any sort of Bitcoin reserve, and taking this asset class into something more fundamental, we are looking at unlocking the legitimacy of this industry. And I say that kind of comically because it's been forcefully made to be illegitimate for such a long time. But now, given the appropriate respect to develop the frameworks for the laws, for the mechanisms to actually build this business in a real way, we are seeing the beginning of something that could be, again, a real industry. And that's very exciting to me. Now, something furthermore in this great unlock of the United States, the retail investor in the US, and the capacity to participate and build in crypto here, something that's been pushed far away for the past 4 years. This was a very interesting note to me. The CFTC staff coming out on a public comment regarding perpetual contracts and derivative markets. Of course, I've talked about Perps a lot. They're launching before spot markets. It's crazy. Even right now, Binance is about to list an asset called Initia, and they've listed the Perps almost a week ahead of the spot market. To me, that's fucking nuts. But we can see that the Perps markets are the highest volume in trading. Of course, to anyone running an exchange, this is an extremely attractive offering. Those liquidations, again, Bybit accumulating almost $400 million in liquidation profits in a single day to offset that $1.5 billion exploit. We can see that the cash cow is here and that the moneymaker is a very attractive and desirable thing to kind of claim the throne on. So with the CFTC opening that up, we can come back. Things like Hyperliquid could be available to the US citizen base, and we would be getting this kind of trading to be permitted and accepted for US citizens. This is the most active format for trading cryptocurrencies at the moment. The US is largely kept out of this. Even Binance recently updated their terms of service around perps, saying that you need to make a certain amount of money per year if you want to invest in this fashion. And that's kind of crazy given just how much sports betting is doing and the turnover around really low stakes gambling in a nutshell. So this would be something that I consider to be roundly healthy. I think it would de-risk a lot of the people that are just going through VPNs onto more suspicious perpetuals markets, but this also opens up things like Coinbase to be able to capture that market. Again, a publicly traded company under US regulations would be a more secure format. Maybe there would be limits to the amount of leverage that you could put into these assets. There would probably be rules and safety to mitigate the colossal collapse of people putting on too much leverage. But at the end of the day, perps and that excessive leverage are very responsible for the high volatility. So it wouldn't be bad to kind of shackle this down a little bit. I'm excited for it. Just these are all baby steps towards making an industry that is mature, that is for adults, and one that can begin the path towards lasting dominance and legitimacy. And that, to me, is what these next couple years are going to be all about. We'll have to see how this all unfolds. Now, last but not least, we have this pretty interesting announcement coming from Coin Bureau. It says crypto giants Circle, BitGo, Coinbase, Paxos, they're all applying for bank charters, licenses to offer deposit loan services, just like regular banks. This has to do with Congress as they progress the stablecoin legislation requiring issuers to be federally chartered or licensed. So what I find really interesting about this is that you're actually getting these companies that are the custodians to Web3 assets. So really there was MetaMask, the Web3 wallet, and then a better way to store those if you're running a real business, these guys, the custodians, but they're taking that Web3 UX first and then getting the banking features underneath. This is a big competitive output against actual banks. I would think that if this actually progresses, you're going to see banks very quickly try to adopt a Web3 UX. This means that people can send money for free. There's no geographic boundaries. Now, of course, all of that money that they save on fees and transfers and costs, that has to eat the things that are being cannibalized, like transfer fees, like overdraft fees, like all of these obnoxious little things that banks make a ton of money on. However, this could happen. Of course, competition really lights a fire under everyone, and this is just another step forward in crypto becoming this mature big boy player in the space. What's going to happen here? I couldn't quite tell you. Are we actually decoupling? Is this Michael Saylor buying? Is this GameStop deploying their billions of dollars? There's so much to unfold here, and I think the chaos is going to keep going for quite a bit, at least until we get a trade deal with China to some degree, but that only looks like it's getting more intense, not less. So as always, stay safe out there. If you're in the markets, just trade intelligently, take your risk down as much as possible, and as always, I will see you tomorrow.